These kind of days when we have many news along the day are really difficult news to consider, because each news can have a surprise in opposite directions, and so they are really challenging days. But the path now is clear for the rest of the day, except for the pound CAD, where we have another CAD news, the ADP non-farm employment change and the wholesale sales month-over-month. But for all the other pair, there is no other news in front of us, so we have just to wait for an entry setup. So the present candle will close in 30 seconds. Obviously, we will have no setup bar in all the pairs. Okay, the present bar is closed, so we have no setup in the pound kiwi. The pound kiwi is in a concession zone mode, so we need to wait for the breakout of this resistance level. Similarly for the pound Aussie, and if the trend reverses to the downside, we will need to have a breakout of this level here. For the yen, we are in a trend mode, but we have no entry setup to go short. In the pound US dollar, we are also in the concession zone mode, so we need to wait for the breakout either to the upside or to the downside. It will depend what the trend will do. And same thing here in the pound Swiss. So we have no entry setup for the moment, so we have still to wait. Hello Randy, welcome. So it seems we'll have a breakout for a long setup on the pound kiwi. I can figure out here the resistance level. Similarly in the pound Aussie, but we have to wait for the candle to close. Similarly for the pound US dollar. And similarly for the pound Swiss. So here, that way, here. On the pound kiwi, we are facing a max price level. It will depend where this blue candle will close, and so where our entry will be. On the pound yen, we are also facing this max price level here, so we'll have to evaluate at that moment. And similarly on the pound Swiss. Or in fact, in all the pairs, we are facing a max price level. So, and we have to wait for the pound CAD, because in 16 minutes we have the news on the pound. So the candle will close, but we have to wait for the update of the prices here. Okay, here we are. We have to wait for the price to go above the max price level. For the pound yen, we are too close to the level. For the pound Aussie, but I don't have the monitor on it. For the pound US dollar, so we are far enough from the max price level. And for the pound Swiss, we are too close to the max price level. So the best candidate for the moment will be, it seems, the pound Kiwi, maybe the pound Aussie, but I don't have the monitor on the pound Aussie. Let's try to set the monitor on the pound Aussie.
Hey, Eusebio.
Yes, Chris.
Just a couple of things. One is for the Americans that have just woken up, or North.
Yeah, indeed.
In the North and in that hemisphere. If you want to join the Max chat room, just go there. There's no password required. Not much is happening in there, but it's available for you if you want to talk there. Sorry, non-Maxers. And the other thing is just looking at the charts where you've drawn last week the price levels. The movements today are really respecting them quite well. It's quite interesting. Like the pound cat is bouncing off the daily version, and if you look at all the other ones, price is bouncing down, or for instance the pound Kiwi, it's bouncing backwards and forwards between the two price levels that you've drawn. Kind of like magic sometimes. Good as warning signs.
So I have opened here a trade on the pound Aussie. I will not take the trade on the pound Q because they are most of the time correlated, extremely correlated. So I will take only the pound Aussie. And I will consider to take eventually the pound yen or the pound Swiss as soon as the price will cross their corresponding max price levels.
So you're okay going long, Eusebio? You said that
yes, long on the pound Aussie, yeah.
Yeah, but prior to the news coming out, you said if there was no change, then you'd be looking primarily for shorts on the trades.
Yeah, because this is what happens very often, but not always. And it seems that it is, again, an example when the price is moving in the opposite direction of what it is used to do.
Sure.
So,
trade what you see, not what you think.
Indeed. This is the problem when we have no surprise. So when we have a surprise, a big surprise, most of the time we know in which direction the price will move. But when we have no surprise, usually the trend which is underlying and continue to unfold, and sometimes the price will move in the opposite direction. So now let's consider, maybe perhaps too late on the pound yen. Let me check. No, I'm not too late in the pound yen. My stop loss is good. Okay, I will go long also on the pound yen. Okay, now I'm in two trades, and so I will handle these two trades. So the setup were good in the two pairs, and so let me simply widen. But I would like to keep an eye on the pound Swiss, on the pound CAD, because of the news on the CAD. So, but I want to set on the pound Aussie where my minimum level of profit will be. So the size of the stop loss is here 35 pips plus the spread. The spread is, let's say, 2 pips, so 35, 37. Half of that will be 18 and a half. 18 and a half will be somewhere here. This will be my minimum level of profit, for the pound Aussie, and for the pound yen, so it will be here. The stop loss size is 32 pips. The spread 1 pip, so 33, 17 pips. I will take 17 pips, so a little bit below the max price level here. This will be my minimum required profit level. So if the price moves in my favor. Hi Robert, welcome. I I am a bit worried about these two trades because, as you can see in our signal bars, so the higher time frames are still downward, and so this uptrend could be possibly very limited. This is the only concern I have, so for the moment, on these movements. So in 7 minutes now we will have the news on the CAD. Now this news on the CAD, in case of a big surprise, will impact only the CAD pairs. This is why so we can take trades in any other pairs not containing the CAD. You don't see the vertical red line as in the CAD pair in all the other pairs. So on the pound of this red candle, which is the candle after the entry bar, is an exit setup bar, as well as in the pound yen, so following our max rule. But as I have said, I use my discretionary decision, so accepting possibly a full loss. So on these trades, but if the price moves in my favor, I want to make a minimum profit on the level where I have drawn my blue aqua horizontal line. And so the concern I have on the higher time frame so seems to be to become more and more concrete in the small time frame. The signal bar are reversing in the smaller time frames, so we will see. Perhaps this uptrend is a fake trend. The possibility is for the price to reverse to the downtrend following the usual behavior after a no change in the interest rates when the currency will weaken, in fact. But we know that after the news, seeing what the movement of price is doing. So. In our Max Advanced course, there is an entire session which is dedicated to the news release, where we go deeper into the concept of the news release. And there is one thing I teach especially is when we have too many news during a day, what I call a key news, and today we had 1, 2, 3, 4, 5 key news. 5 key news. So when we have too many key news, and too many key news is more than 2 key news, so these days anything can happen because we have too many of these key news. And so if these key news are contradictory each other, so we can have in fact a very erratic movements in the market. And so these days, which are not so frequent, because we don't have more than 2 key news every day. So, but when these days happen, so these days are way more difficult to trade. This is an illustration today with all these news. So, but we have to do with them, and we can see indeed on the pound yen the trend seems to reverse. So I will have to be ready to reverse my trade. And we will have the CAD news in a few seconds now. not the green button in the calendar. Let me check. Yeah, we have. And so let's see here what the news will be. So no surprise in the wholesale sales month over month. Even if it is a yellow news on Forex Factory, it's an important news for the card. So the two are important news for the card. But this time it takes time to update the site. So I will check later, so we can see on the chart what is happening. So the price seems to come back on both the pound Aussie and the pound yen. So that's not bad. I'm checking that the two trades are still open. Yes, they are. Still no update of the ADP. The Philly Fed is good, extremely good, but for the moment the big boys don't pay attention to the Philly Fed for the US dollar. So no surprise on the CAD. Still no update. They are late for the update on Forex Factory today.
Not just Forex Factory, Eusebio. Investing.com has not got anything either.
Yeah, but it is not a surprise because, as you know, Canada is one of the three countries applying the lock procedure to release their news release, but this applies only for news release by an administration. And so the ADP non-farm employment change is not released by an administration, but by a private company, ADP. And so this is why the time schedule is not always respected. So, but for a news, okay, 36.2, so not a big deviation, so pretty much the same as last month, so no surprise at all. So the lock process is used by three countries for the news released by an administration, a public administration. So it is the USA, Canada, and UK. But the ADP is not an administration news release, so it's not a surprise to be late or to be sometimes in advance. So no surprise for the card, so nothing special for the card. So in this case, so I will stick with these two pairs, and so we just need to be patient to see how the price will move and how the trade will evolve. Let me still check also quickly the Philly Fed, but the Philly Fed, we are in a moment in the US economy when it is not really followed by the big boys, so it's very good, but not important, in fact, for the moment. You can see the price on the pound US dollar is almost not moving at all. So now just wait patiently for some movements in one direction or the other. Yeah, Adrian, same price as 4 hours ago, indeed. In fact, this is what happens very often when we have too many key news during the same day. So the best days with the news is when we have no news or just one, maximum two key news. And I'm going to give a small trick here for the news. So, in fact, it's pretty much easy to predict what kind of movement we may have when we have one or two key news. Will we have a big movement or not a big movement? And so this, of course, suppose that we will have a big surprise. Okay? And so, but this applies only when we have maximum two key news. And so it is just enough to observe the previous day. And so let's suppose today we have only two key news, maximum two key news. If the previous day has had a big day, so a big movement in one pair, for example, let's take for example the pound-yen. If yesterday we have seen a big movement in the pound-yen, then today chances are high to see also a big movement. Not necessarily in the same direction, but the probability is around 80%, 75 to 80%. So a big day is followed by a big day, in fact, in 75 to 80% of the case. But as I have said, not necessarily in the same direction. It may be in the same direction, it may be in the opposite direction. So, but you may have an idea of the type of day you may have. With the news, really, there are several types of days. We define three types of days: big days, range day, or something else. And so we did the refined details of this feature in the Max Advance course, in fact. So this candle on the pound CAD could possibly be an entry setup to go long on the pound CAD, but at the close of this candle, we will have to check all the conditions. And we may have again a breakout in the pound Kiwi, but I have two trades here which are simultaneous, so I will not consider a third trade. But unfortunately, as you can see on the pound CAD, the price is also approaching our home base, too close to the home base, so this will make this trade questionable, in fact. Adrian, I'm going to take the opportunity here. We are waiting to give you some complimentary answer to your question about the email you sent me 2 or 3 days ago, because I have seen your email, but I have had no time to answer it. And by the way, I'm not able to answer your two previous emails because I have had a problem with my email server. I have lost the 4 last months of my email, which is really a problem for me. But so concerning the quality of the CRB chart, first of all, yeah, that sucks indeed. And I have a big problem because in these emails I have some invoices from my suppliers, and so I'm forced to ask them to send me back their invoices. So, but so concerning your question about the quality of the CRB charts, the quality of the CRB chart does not depend, in fact, on the platform we are using. We may use TradeStation, we may use NinjaTrader, we may use MetaTrader, we may use any other platform, as long as it's a CRB chart concerning the Forex. So the quality of the CRB chart will depend, in fact, on the quality of the data feed sent by the broker. When we are on a centralized market like the futures market or the stock market or the bonds market, we don't have that problems because we have all the trades in the centralized market, and so the charts are way more accurate. And so the CRB chart should normally be the same for all the charting platform. There may be some small differences depending on the time lag each platform may have. But on the Forex, because the data feed we receive, whatever the platform, the data feed we receive is manufactured by the broker, depending on the data feed the broker receives himself from his liquidity providers. And so from one broker to another, we may have a large difference in the quality of the charts, and this quality impact directly on the CRB chart. Yeah, IQ feed is great because IQ has a high level of activity, and the quality of the chart for the Renko bar chart, for the CRB chart, depends on the level of activity of the broker. Larger is the customer base of the broker, higher is his activity, and so better is the quality of the data feed. And this is the problem with the Forex, in fact. And so the question is not, the problem is not on the side of the platform, but on the data feed, in fact. And so the best way is to have a data feed for Forex corresponding to a high level of activity. So IQ may be good, of course. I have used IQ in the past. The data feed of FXCM is good too, because FXCM has a large customer base, and so their level of activity is high. And some other brokers also have a large volume of activity. But some brokers have poor quality data feed, that's true. When we have introduced the CRB chart into the MAX a few years ago, with Chris we have made an analysis of several brokers, and so the difference were huge. Up to 50% more bars with, or less bars with some brokers, comparing several brokers, for example, and so, yeah, we have to pay attention to the data feed. Now, I agree also completely with one of your comments. The quality of MetaTrader is not so high, even if graphically the user interface seems nice, but in fact the technical quality of MetaTrader is not so high. But it has the advantage for the training aspect that it is a free platform with free data feed. But when we trade live, of course, it's better to have a better platform. With my live trade, in fact, 2/3 of my trading platform are not MetaTrader. So. Yes, Edward, the max is applicable to any kind of chart, and so you can use it with range bar or you can use it with Renko bar chart, but you will have another difficulty if you use range bars or Renko bars, is how to choose the size of the bar. How to choose the size of the bar. And this is why we have the special course here with the sum, the max ETF sum, which explain, in fact, how to set the chart and what the setups becomes, in fact, because there are some differences with the time bar chart. So what is the price doing here? So on the pound CAD, so this candle was not a valid setup bar. Let me check. Yes, it was a valid setup bar, but too close to the home base, so we have to wait further to have a better entry, not a good entry. And for the pound Aussie and the pound yen, so the price is moving at the proximity of our entry level, so the price is pausing for the moment, so we have to be patient. Okay, Chris, have a great night. Thanks for your assistance during this first part of the session, so have a good sleep. And Craig is taking the desk now for support and recording of the video. Night, yeah. It's night time for Chris. night time. I'm using a platform like, for example, TWS, so Trade Workstation by Interactive Brokers. I'm using also the Java platform, not MT4, but the Java platform of Wanda. I like it. It's a very simple user interface. And but on this platform, I cannot use the Max template. And so, Adrian, I have never had a problem with Interactive Broker. I'm using it for many years. I have had never a problem. So up to now. And so we don't have the template for all the platform. We have the indicators and the indicators for TradeStation, for NinjaTrader, for multi-chart, I think. But perhaps not all the indicators for NinjaTrader and for MetaTrader. So, but what I do when we don't have the indicators and the template for a specific platform, for example, TWS of Interactive Brokers, I make my analysis on MetaTrader, but then I execute my orders on TWS. Similarly with the Java platform of Oanda, for example. For the moment, Matthew, no, not on MT5. No, not on MT5. And I don't know when, because unfortunately, what is developed on MT4 is not supported by MT5. MT5 is an upgrade of MT4, but not supporting the development under MT4. So we need to completely recode the indicator for MT5. MT4 will no longer be developed, but will still be supported for some times. So. Oh yeah, Edwin, yeah, sure. No, TWS Interactive Broker is not good for as a charting platform. I completely agree with you. It has no feature at all as a charting platform, but it is a great platform for trading to execute the trades, and it's very fast to execute the trade. Yeah, I completely agree with that. Yeah. And also the support, the customer support is almost inexistent. And this is the choice made by Interactive Broker, and they claim that they want to have customers having experience in trading and having experience in their platform. And so when you ask some support from them, they are reluctant to help you. So. Yeah, indeed. I tell you, I'm using Interactive Broker since the 90s, so it's more than 20 years now. I have begun to work with them since exactly 1992 or 93. Never one problem. Never. So what is happening for our two pairs? So yeah, indeed, Adrian. So this sometimes happens. Yeah, Interactive Brokers. Yeah, it is a well-known broker, and the advantage of Interactive Brokers is you can trade any markets. You can trade the stock market, the forex market, the futures market, the bonds market. In fact, and it is a listed U.S. stock market company. Yes, indeed. So you can trade all the markets you want. So with Interactive Brokers, and it has a big share of all the trades made all around the world, in fact. Yeah. They have insurance for all client money. And it is still a family company. Interactive Broker is still a family company, in fact, essentially a family company, and the founder of the company has just retired a few weeks ago, in fact. So, in the pound Aussie, we should be able very soon to fine-tune, to adjust our stop loss when this bar will close, the present bar will close as a blue bar. And similarly in the pound yen, but in the pound yen the price is not moving for the moment, so we will have to wait a little further. But on the pound Aussie, we will be able to adjust a little bit our stop loss. Yeah, and what I like with a platform like Interactive Brokers is when we take a trade in a market, we can also hedge somewhat the position by taking another trade in another market. So we can create hedge trades between intermarket hedge trades, and so this is really convenient with such a platform because you can access to any market with exactly the same platform. So the present candle will close in around 1 minute now. And anyway, I will be able to somewhat adjust my stop loss. So in this case, I use the outermost line to adjust the stop loss. You will see that as soon as the candle will close, I will show you where I will adjust my stop loss. Even if the price comes back around the entry level, so I will be able to adjust the stop loss. In both pairs, by the way, by a few pips. Okay, the present candle has closed, and so I can here tighten my stop loss. Let me see. Oh, not a lot, but 1 pip is 1 pip. So, okay, that for the pound, the pound Aussie, and for the pound yen. No, I cannot adjust the stop loss for the pound yen. The price has made a first attempt to reach my minimum profit requirement level, but then has retraced. So let's see for the next attempt. We need patience. We need patience. Yeah, Edward. Yes, indeed. This is the problem with the time bar chart. We have always to wait for the bar to close when we are waiting for a setup bar. And this is, in fact, the CRB chart or the Renko bar chart is one way to reduce greatly that problem. Because these two types of charts are time independent, but are focused on the price movements. And, but you have to choose correctly the size of each bar. So, but this is one of the ways to reduce that problem. So it is often said, and this is true, by the way, that any technical indicator has a lag. They lag the price, and they cannot do otherwise. But this is not necessarily a problem because it depends how we use them. But there is also a time lag with the time bar chart if we are forced to wait for the bar to close. And the lag is the the duration of the bar, so it corresponds to the time frame. The price seems to become a little bit erratic. Let's see if there is some news or some events, happenings. No, nothing new. Nothing new on the Brexit front. So we have just to be patient until the trade is closed. Okay, with this new candle having closed, so I have no opportunity to fine-tune the stop loss on the pound Aussie, and similarly on the pound yen. So I can do nothing for the moment except waiting. And no other opportunity on the pound US dollar, on the pound Swiss, no opportunity on the pound Kiwi, and certainly not on the pound CAD for the moment. Okay, it seems the price want to again move upward in the pound Aussie. Perhaps it will make an attempt to reach my minimum profit requirement. Or it's not a requirement, it's a desired level of profits. Now concerning the max price levels, so we have indeed a mini course, as Chris has explained earlier, a mini course explaining a very simple procedure allowing you to draw most of them. But another way to draw some of them is to use a market profile. So if you use the market profile indicator, and so you will find the market profile indicator on all the platforms. It exists now in all the platforms, so TradeStation, NinjaTrader, MetaTrader, of course, Multichart, and so on. And so when you take, for example, the market profile or the volume profile of the previous day, so you can use the levels given by the market profile as levels you will have to consider today, the next day. So, and they will be extremely useful to define possible supply or demand levels or possible support or resistance level. So, and when you find an indicator on the market profile on any website, you will have most of the time also an explanation how to define these levels. So you have typically the price of control level, you have the 70% levels, and you have also the high and the low volume nodes you can use for levels also. And you will be amazed on how very often the price will respect these levels the next day. And you can consider such levels for some previous days, so the previous day, the day before, again the day before that, so on 3 or 4 or 5 successive days. So, but you can also apply the market profile to higher time frames. You can consider, for example, the levels given by the higher the market profiles or volume profile applied to an entire week, and you will have other very useful levels also of supply and demand, potential supply and demand level. So will the price succeed to break that range area in both pairs, the pound Aussie and the pound yen, which will be necessary to see the price having a chance to go higher. But But for the moment, you can see I cannot adjust my stop loss further. Okay, let me widen the two charts here on the pound Aussie and the pound Kiwi. Just to have a finer look to my charts. So on the pound Aussie, the price is approaching my minimum level for a desired profit. This doesn't mean I will have to take a profit, of course, on that level. But because this session is becoming a long session, what I will possibly consider is to take a profit on this level, just to show you how the risk will be reduced by closing one unit. It will depend what the price will do in that area. But normally, I would take my profit if I have an exit setup giving me an exit level on or above this level illustrated by this blue aqua horizontal line. And it may possibly correspond to an exit setup because we are in the proximity of something which is important on our template, which may be possibly at the close of the bar give an exit setup bar. So, which is not the case in the pound yen. This bar will close in 1 minute, and if it continues that way, it will not give an exit setup bar. Maybe in the pound yen, after all, let me check. Yeah, perhaps in the pound yen. But the profit will not be large enough. So here we will have most probably an exit setup due to one of our rules, exit rules, but the profit will not be large enough. So I will not consider to take it. So. Yes, Edward, I'm using a simplified template. I'm not using the complete max standard template. So, because we are here in a public session. And now let me check here. No, this is not an appropriate level for an exit. No, we are too far away. So we don't have an appropriate exit setup here. So in a public session, Edward, I'm using a simplified template. So here in this area, I need a better exit level to take out my unit. And I still cannot adjust my stop loss. No. And no. No, Edward. No, Edward. In fact, it's just a matter of practice to recognize the exit setup with all the tools we have. It's just a matter of practice. Believe me, with enough practice, so at a glance you will recognize the exit setups at a glance. Will we have another opportunity here for an MX on this place? We will know in 2.5 minutes. Oh, you cannot bend the rules, Edward. Not good to bend the rules. And the discretionary situations are extremely limited. This is a subject I explained lengthily also in our Max Advanced course. There are typical situations when we can use discretionary situation, and I describe in detail what a discretionary decision is. I name it also a gambit by analogy with the chess game. So, but they are extremely limited, and they are always explained with an argument based on the trade risk management, in fact. So the discretionary decision is not subjective, as many may believe, simply by the association discretionary decision, the association of the two words, because it is used to consider that discretionary decisions are subjective. But in the Max Advanced course, I have made it not subjective. So based on the trade risk management. So here the bar is going to close. So we will have another opportunity for an MX here. We have one of our exit rules which may trigger, in which case this blue candle may be possibly an exit setup bar. So 5 seconds. Yes, we have an exit setup bar, and now so my exit level will be just a little below my blue line, so in the proximity of the level I want to have for my profit. So on this level here, I make an MX now. Okay, I make an MX, and you can see how the risk on the pound Aussie has been nicely reduced. Okay, and furthermore, on the next candle, I will be able to adjust my stop loss nicely, making most probably this trade risk-free. And so you can see that I have defined my minimum profit requirement or desire based on the size of my stop loss. But it's a complete coincidence that my exit setup has triggered right on that place. This is a complete coincidence, okay? And similarly here with the pound yen, we will approach a moment when we will be able also to reduce the risk on the trade. Yeah, you need to have patience, Edward. Whatever the price is doing, okay? Whatever the price is doing, patience, disciplines, and so sometimes it requires guts to have to trade and to stay in the trade. And this is why so we have to build as traders 3 levels of confidence. The first level of confidence is in the price itself, in the markets, in fact, and you can do that by scrolling through many charts through a long time period, several years eventually, to see that the market makes nice movement almost every day. Not every day, of course. There are some days which are really ugly days, but you will get nice opportunities almost every day. So you can build confidence in the market. Then the second level of confidence is in your trading methodology, by observing that if you apply the rules with no discretion, when we have these nice movements, you will catch nice trade opportunities. And when you don't have a good trade, you will minimize your loss. Of course, in the methodology, you have also to take into account the context, because the context tells you in which direction, in fact, most of the time to trade. And the third level of confidence you have to build by practicing is in your own skills, in your own skill, in your own abilities to apply the rules of the methodology correctly. And this requires practice. And when you build these three levels of confidence, trading becomes easier. I don't say becomes easy, but easier, because trading is always difficult. Trading is one of the most difficult activity I know, in fact. My past profession, which was in the IT industry, I have worked almost 30 years in that activity, has given me the opportunity to be in contact with many types of professions. During the last 15 years in the bank industry, but for the first 15 years in many other types of activity. And I can tell you now that trading is one of the most difficult activities in the world. And so trading is not a hobby, cannot be considered as a hobby. And so what a professional does in another professional activity is to try to get as many skills as possible in that activity. So it's the same thing in trading. You need to develop as many skills as possible. That's so how to apply fixed rules, how to adjust the rules depending on the market conditions, how to learn when the market is changing conditions, how to understand the context in order to better know in which direction to trade, how to expand the elements you include in the understanding of the context, the global context. And this is perhaps the most difficult part of trading, because this requires to develop over time a large trading culture and a vast economical culture too, or some aspect of economical culture. So, because the market moves depending on the fundamental factors driving the markets, even with small time frames. With small time frames, it's even more difficult than in higher time frame. And then you will see that all the markets are correlated or linked together. And so by studying, by including in your methodology that intermarket relationships, or these intermarket relationships, so you will have a better understanding why a movement is unfolding at some moment. And all these aspects make the trading activity so complex, because you have a lot to study and then to apply. Okay, Dave, have a good cup of coffee. So, okay, now here on the pound, so on the pound Aussie, the previous candle has closed. I can now tighten my stop loss by a good bunch of pips, and you can see the risk on the pound Aussie is 0.21%. Now let's adjust the stop loss in this area, and you will see how the risk will be reduced. See, now the risk is reduced to 0.08%. I'm virtually break even. On the next candle, I will be able to tighten probably further my stop loss to be really at break even. And similarly with the pound yen, on the pound yen here, I can tighten my stop loss around this area. The risk is still 0.94, so I will reduce the risk to 0.72 here. And I'm also approaching a moment when an exit setup rule will trigger in this area. So just a little above my minimum level for my desired profits. The max standard traders recognize which exit rule I mean, which was exactly the same as the rule here. And in fact, just to explain one aspect of that rule, it coincides with this max price level. And so the exit rule will be, in fact, a rejection of this level. So if the price makes a movement like that, so comes, closes in the proximity, even a bit higher of that level, and then comes back, here I will have so an MX. So if this happens, so this will be a max price level rejection. We call it that way, a max price level rejection. Now the stop loss on the pound Aussie is relatively large. We have a distance of around 45 pips between the present price and the stop loss. And because I am almost break even of the trade, it's not forbidden to tighten a little more the stop loss and try to be exactly break even. But in this case, I would be forced to tighten it a little too much. So I prefer to wait for the next candle to close and to see how these lines will evolve to adjust my stop loss. In the pound yen, I will be able to reduce a little further my stop loss. And I can do it now, in fact, so around this level. So reducing a little further my risk. The risk has been reduced by 1/3 approximately. And no further tightening of the stop loss here for the pound Aussie. So we will have to wait for at least 2 more bars before adjusting the stop loss. Or 1 more bar, it depends how the blue line will evolve, because the blue line now is the outermost line. So it will need to go upward to give me the opportunity to tighten further the stop loss. And you can see that on the two trades, now the risk is 0.7%, so less than 1%. Initially, the risk was a little less, just a little less than 2%, so the risk has been nicely reduced by 2/3 approximately. And on the next stop loss adjustment, if this opportunity presents, so it will be further reduced. And so when we are at such a point, we can consider the two trade become extremely comfortable, even if they can still end with a loss, of course. In around 2.5 minutes, we will have the Wall Street Open, and the Wall Street Open may have a small impact in the Forex. And so generally around the Wall Street Open and some similarly as some other time period in the day, we may see not necessarily a trend reversal, of course, but a price reversal. So you can see that the pound yen is going upward, and so now it's make a small pullback. Similarly, the pound Aussie, it's make a small pullback. This is the effect, in fact, of Wall Street Open. You can ask what is the relationship between the stock market and the Forex. But in fact, Wall Street represents several stock markets, the NYSE, the Amex, the Nasdaq, and some other out of the OTC market. So, and some big trades may require sometimes a change in money. For example, if you have big Japanese investors wanting to make a transaction on a big US company, they will have to change yen into dollars, for example. And so this change is made on the Forex. And this is why, in fact, the the Wall Street Open. It's one of the reasons why the Wall Street Open may have an impact. So in the forex, there are other relationships which happens in the context of what I have explained previously with the intermarket relationship. But this is one of the reasons, in fact. And so it's not a surprise to see that at the Frankfurt Open, the London Open, the US Open, the Wall Street Open, you see such kind of pullbacks or price reversal, which may be simply temporary, sometimes 1 bar, sometimes 2 bars. And this may happen sometimes just a little before the market open, right on the market open, or just after the market open. So in the very proximity of the market open. So we are in that context now. We are in the very proximity of the market open, which opened now in 3 seconds, and we have seen that pullback. So what happens very frequently now is that the price will reverse in the opposite direction. This is the typical behavior we frequently see. Not always, because the trend can reverse at any moment, but this is the most frequent behavior. And with this last closed bar, I cannot further adjust my stop loss, because now the outmost line is the blue line and I'm too close to it, so I cannot fine-tune my stop loss on the pound Aussie and on the pound yen, perhaps 1 or 2 pips, so that way reducing a little further the risk on the pound yen. The price makes an attempt to attack the next max price level, so let's see if it will succeed to reach that level, which will give us eventually a good opportunity to make an MX. The price is somewhat choppy here in the pound Aussie, and so having made a profit of 16, 17 pips, so here I will set my trade stop loss here at break even +1, so 17, 16, so at -15. So it will be here. I will tighten my stop loss on this point, plus the spread. No, okay, I'm good. So we are in a long trade, so the close is made on the bid price. So here, by adjusting a little further my stop loss, so because we are in a choppy mode, so you can see that the risk now is has disappeared. So this trade is now break even. So at most it will be, at worst, so it will be break even. So this means that if the second unit is closed on the stop loss, so there is no loss in the trade. And for the pound yen, I'm still waiting to make a first MX before deciding what to do with the second unit. So for those of you who have taken the max primer or the max standard course, I have explained when we are in a choppy trade how to handle the stop loss and the second unit. You know the rule with the 15 pips, the 10 pips. Here, so we have 16 pips profit on the first MX, but it is a volatile pair. Okay, it is a volatile pair, and so I don't consider we are in the first scenario with 15 pips, so I consider we are in the second scenario. And so I set my stop loss in order to be globally break even, or break even plus 1 pips. So with just a little locked profit, a minuscule locked profit, so virtually break even. And I will continue to make the same thing here with the pound yen if the price succeeds to reach the exit level in this area. And the stop loss is still large enough. We have approximately 20 pips from the present price to the stop loss. It is still large enough to still leave a chance for the price to make its pullback and then resume the up movement without hitting the stop loss. You see how a retracement can be very fast on these volatile pairs. Maybe my stop loss is too close, but it's the rule we have, so we have to make the trade safe because we are in a rather choppy mode, in fact. And in a choppy mode, we can expect a reversal at any moment. So we need to make the trade safe, even at the price to stay break-even on the trade. In the pound yen, if I succeed to make an MX in this area, the profit will be around 19 pips. So in this choppy movement, we will be in the first scenario for the max graduate. So first scenario, so I will have to adjust my stop loss, as you know, around the break-even point here for the second unit. So set the stop loss at the break-even point for the second unit. Break-even or break-even plus 1. Ah, that's good. Now, no, that's not good because the blue line is still flat. So this will not give us for the moment the opportunity to tighten further the stop loss. So we still need to be patient. Now, for the max graduates, especially the max standard graduates, know that this candle here on the pound Aussie would have been normally a setup for a scale-in, okay? Setup for the scale-in. But because of the context today with too many key news, so I prefer not to make scale-ins. Because we may have anything, and so when we may have anything, so I don't make scale-ins. And you remember, in a choppy mode, we don't make scale-ins. And so this is also a way to appreciate the risk we may have on any trade, and when the risk is too high, and we still have to take the trade, but when the risk is too high, so we can decide not to make any scaling, because the scaling, of course, will add risk on the trade. Okay, we may have here possibly an exit at a bar, but we have to wait for the bar to close. But let's watch closely what is happening here. And under such a situation, 3 minutes, it's long. It's a long time. It seems an eternity. So, but this is where you need to stick to the rules. Two minutes. And typically when we have such a bar, the bar will begin to retrace during the last minute before the candle closes. And here the setup we had possibly on this level may repeat possibly on the next level here. So we will see. And this is a long bar. This is a long bar, so 22.5, 1/3 will be 7.5, 7.5. Right on this. So we have what we call a long bar. I will explain later, but if the price retraces, I need to be fast. Where is my pound yen? Here. I will make an MX here now. Okay. And so reducing the risk on the pound yen pair. You see now the risk has completely disappeared. We have banked one profit. And because we are still in a choppy mode, I will adjust my stop loss here for the second unit at break even plus 1 pips, and 1 pips will be around this level. So I will set my stop loss right here, and you will see that we will bank more, we will lock more profits. So the two trades are now risk-free. So, and now let me explain, in fact, the rule we call the long bar rule. So what is a long bar? And this is something we want to give you also for all those who are not max graduates. So a long bar is a bar which has a length, and the length is calculated from the high to the low, so the entire candle, which has a length which is at least twice or more the average length of the previous bars. The previous bars making the movement preceding the long bar. What is the movement preceding the long bar? Let me make a zoom in here on this chart. So on this chart, a movement preceding a long bar must have at least two bars in the same color, two successive bars in the same colors. And so we have these two blue bars. So this is the movement preceding the long bar. It may be a movement in the same direction or in the opposite direction. The direction doesn't matter, but we have two successive blue bars. So we will consider the average length of these blue bars. We don't need to make any calculation. We can eyeball that this bar is more than twice the average length of these two bars. So we are in the context of a long bar. And when we are in the context of a long bar, we will consider the possibility for the price to retrace, because very often 3 out of 3 times the price after a long bar makes some retracement. So we have to consider where the price can retrace. We never know how deep the price can retrace, but we have to consider in the context of that retracement where to make an MX. So a partial exit closing 1 unit. And this is what I have made. And so we have rules to define the proportion of the retracement. And this has given so an MX with a nice profit, because the profit was, you can see 26 pips. 26 pips allowing us to make the trade safe, plus the fact that we were still in a choppy mode, the fact that we had to adjust the stop loss in a specific way in this choppy mode, and now so the trade is extremely safe because we are banking, we are locking some minimum profit, and we are approaching the 1% profit for this trade. Okay? And we have similarly a long bar here with the pound Aussie, and so I will consider where to make some profit. So 29, so this means 7.3. 7.3 will be here. I'm a bit late. I should have already closed the trade, 7.3. So if the price comes back to this level here in the pound Aussie, I will close my trade. Now, of course, my stop loss now is above my 2 lines here, so I cannot adjust further the stop loss. I will have to wait for these 2 lines to go above the stop loss to be able to further adjust the stop loss, except if the price continues to make long bars. So patience and applying all the rules we have at our disposal helps to be, at some moment, risk-free in the trade. On this point, we may have another exit setup triggering, but I will not consider this exit setup because we have already made an exit here. And so we have another rule telling us when 2 successive exits must not be taken. we have what we call a time window. A time window is it's a period of time when we do not make two successive exits, whatever the price will do. And so we are in that context. So we are in the same time window when we have made that first MX. So no exit here if we have an exit setup on this next candle. Okay, this candle so is an exit setup bar, but if the price follows through and the exit level should be normally now on this level, I don't take that exit, even if the profit is a nice profit. So because we are still in the same time period or time window than the previous exit, so I will ignore that exit. And here in the pound Aussie, so no exit. The price does not follow through to reach my exit level. But I can fine-tune my exit level because now we have another rule applying with the long bar. In fact, when the long bar has not given the exit, we have sometimes the opportunity to fine-tune our exit. So 11.3. 11.3. No, I will be in the same level. So I have no opportunity, or perhaps just a little here. Yeah, just a little bit. So at this level, if the price retraces at this level, I will close the trade. Now you can see on the pound yen that the two lines have a tendency to go over the stop loss. So this will give us later, if the price continues to go upward, an opportunity to continue to tighten the stop loss and to lock more profit on the pound yen. Let me make more space on this chart. So here, just in order for the price not to mismatch with the signal bar. So that way I want to see exactly what the price is doing. Okay, now I better see what the price is doing. So this long bar rule I have just explained, you can apply with any trading system. So even when you trade, when you scalp trade the market, when you get a long bar, you can always apply that rule. A long bar is always a nice opportunity to bank some profit, so at least partially. This is an example of the exit rules we have, which is based on the pure price action. So because no indicator is involved in that rule, simply the fact that we have a long bar. And then we can elaborate a little more on the concept of the long bar with the concept of the super long bar, as we explained in our courses, and I'm illustrating in this example in a little less than 2 minutes, so in 1 minute and a half, I will reevaluate my exit level with this sequence of candles. And I will have probably the opportunity to fine-tune or to tighten a little further my stop loss on the pound yen. Now you can see that the profit on the pound yen has reached 1%. You can decide at this point to close the trade. If you are happy with 1% for the day for the trade, you can close the trade. But because we are trend followers, we like to try to get the largest portion of the trend as long as the trend is unfolding. So this candle will close in 40 seconds now. So we will see on the pound yen if we can tighten further the stop loss. The stop loss size is actually 43 pips, and we will see similarly if we can adjust the exit level for the second exit on the pound Aussie. Because on the pound Aussie we are left with only one open unit. So 8 seconds, 4 seconds, 3, 2, 1, 0. So the candle is closed. Let's wait for the open of the next candle to see it should open in this area. But I can already define my next level. So 48, 16 pips will be in this area here. Yeah. The data feed is a bit freezing. I don't like that way when the platform is not freezing. Some brokers freeze the platform, some brokers freeze the data feed. So I have to pay attention here. Possibly I will have to make an x86 if the price comes on my exit level here. Because we have the concept of what we call the super long bar. Here on the pound yen we are still in the same time window as our first exit, so no further exit for the moment. We have to wait. And I cannot adjust further the stop loss. Except if we use another rule. Yeah, but Edward, it's better to have some lagging sometimes in the data feed than to have the platform completely freezing when you can do nothing with MetaTrader for sometimes several minutes, which is really, really frustrating. So, and this is especially when we have a news release. Now let's pay attention here on the pound Aussie. No danger for the moment. So it's just enough to have one or two more bars to be able to adjust the stop loss and to further lock more profits. So the other rule we can use to tighten the stop loss is to adjust the stop loss based on the concept of level of resistance. In the case the stop loss become too large. And in both cases, we have a stop loss size of around 50 pips. This means that if the price reverses very quickly, we are forced to leave too many pips on the table. And so in this case, what I can do is, so we have one level of resistance here, a second one here, a third one here. I can tighten my stop loss for the pound Aussie just above my entry price level. And look for the pound Aussie, how much profit I will lock further by adjusting my stop loss here. You see, 1/4 of 1%. And for the pound yen, so we have 1, 2, 3. Let's say I can tighten my stop loss below this max price level, and you will see how much profit I will lock on the pound yen alone. So right here. So I'm looking, let's look a little more here. So 2/3 of 1%, okay? And globally almost 1%. Or I need to make my x86 here on the pound Aussie because the price is on my level. So I close this trade. So now the trade is closed on the pound Aussie with approximately 2/3 of 1%, and looking a little more than 1% and 1/4 on the two positions. So 0.62 Okay, and so I can now reset all the numbers for the pound Aussie here, that way, and now we are left with the pound yen. So the pound Aussie is closed. If I look in the terminal panel for the trade, the history account, so we can see that the equity is larger than the initial balance, but the balance with the close trade is not yet. We have not recovered all the losses yet, and in the account history, you have the details. So here, and so normally when I will close this trade on the yen because of the profits on the pound yen pair. So with the 4 trade we have taken today, we should be in a profit. So I will remove now the MTM from the pound Aussie. This will make the chart a bit lighter, and I will reduce the chart on the pound Aussie that way. I will remove also the EA on the pound Swiss. On the pound US dollar, you see on the pound US dollar we would have had also a nice trade, a similar trade, and in all the other pairs. So remove that way, and similarly in the pound, you see the pound CAD also. Finally, the pound CAD has crossed the home base, and similarly the pound Aussie. So all these pairs would have given exactly the same trade, long trade. Okay, so now we are left with the pound yen, and let's focus on the pound yen. Yeah, indeed, Dan, so all these pound pairs have had approximately the same types of movement, indeed. And I know that you like to make earlier entry using your trick, so I suppose you have made a nice profit. So congrats. I'm always happy to see a max graduate making regular profits with the max. Now, an important level for this trade will be around the home base here, because very often the home base will be a point where the price may bounce off. And by the way, you can see that if we draw some support and resistance level, if we take this bottom, so we are right below the home base, and so we are approaching a specific resistance area, and then we have, with all this range here, the bottom edge of this range is also just above our home base channel. So all this area here will be a critical area. So all this area surrounding our home base channel will be a critical area. So this candle will close in now, and we may have possibly a rejection of this home base channel, in which case, so I will consider to close my trade. So I will close the trade if the price moves at 772, so at this level. So if we have a rejection, and the rejection will be a good one, yes, So if the price reaches this level I have drawn with my horizontal blue line, I will close my trade on the pound yen. The next level for a possible rejection, if the price continues to move upward, will be the mid line of our home base channel, which is called the home base, and then the next level will be the upper band of the home base channel. Because as I have explained a few moments ago, we are in a critical level here due to this resistance level and due to the range area we have here in the price. With the price moving further higher, I can tighten now my stop loss in this area here. The max graduate know why, locking more profit on this pair. And you will see that with these 4 trades today, 2 have been losing trades, 2 have been winning trades without any scalings. But you will see that at the end, these 4 trades will be globally profitable. So we are still in the context of the lower band of the home base channel rejection. So I have to pay attention here for the XXX. Okay, I'm making, no, not yet. Yeah, I'm making my XXX now. Okay, so the trade is closed. You can see 0 here. The trade is completely closed. So I can now reset all these numbers. So, oh, I have not paid attention of the profit made on the trade. So I somewhat observed the profit on the trade. Oh, 6 trades in total done today and 5.5% profit. That's not bad at all. What was your risk? 2%? 1%? So here the pound yen has been closed first of all with 37.9 and 38.75. So 5, 16, 16, 11. So 1.17 are profit. So and you can see that so the trade have been closed with either partially unit by unit. So and so you see a total profit. So a small profit, of course, here only 2 trades with a 1% risk per trade, and so the profit is around 0.5% profit in total. Okay, approximately 0.5% profit, which is not bad for 4 trades with 2 losing trades and 2 winning trades. So using only 1% risk per trade. Of course, the profit would have been the double should I have used a 2% risk per trade, which is not bad too. Now, some of our max graduates have small variations in the way they take their trade, which help them to take the trade earlier. For example, on a pair like the pound yen here, instead of making the entry in this area, so with the small trick they use, they may possibly open their trade, for example, somewhere in this area. And with so 2 advantages. First of all, an early entry, and second point, a smaller stop loss. And the combination of both help to increase, importantly, the size of the reward to risk ratio. Okay, but of course, this kind of entry sometimes may be a little riskier, and this requires to accept, of course, to have possibly some more losing trades. But to have some more losing trade is not a problem if globally we have a more reward to risk ratio. And in fact, this is what is important at the end. It's not the winning rate we have along the trade, but it's the reward to risk ratio we have. Let me write something here on the chart here. With the max, we have on average 70% winning rate. Okay. With the max sum, the max ETF sum, we have approximately the same winning rate. Sometimes the winning rate can drop to only 30%. Sometimes it can climb to 100%. But this is the winning rate. But what is important is never the winning rate. It's the profit or the result you make at the end of the day. If at the end of the day, even with a low winning rate, you make a profit, you are positive, then this is what matters. And so this happens very frequently when I have between 30 and 50% winning rate, but I still make a profit at the end of the day between, for example, because I use a small risk per trade, between plus 0.5% and plus 2% per day. And sometimes when I succeed to catch better movement, especially in the case when we have few key news, not like today, because when we have too many news, they break the trends, in fact. But when we have few key news, 0, 1, or 2 maximum, so and I succeed to catch almost the entire trend, then the profit will be usually larger than 5% for one trade, even with a 1% risk for the trade, and with the scaling mechanism. So, this is what the max is, in fact. So the winning rate is never a problem. The profit is the problem. In fact, is the point. Okay, any questions about what I have illustrated today? Dan, yes, everyone see your comment, Dan. Yeah, because Craig has answered as he has answered in such a way that everyone see your post. Okay. Yeah, and Dan is, by the way, one of the max graduates which regularly participate to our events, to our scrolling party or practice sessions, and so for years now, and this is why. So he makes regularly nice profits. So. Adrian, this may be perhaps a suggestion. Yeah, but you know, if you follow all our scrolling party, Dan has already explained on 1 or 2 occasions how, first of all, he makes his entry, what is the trick he used to make an earlier entry, and what kind of trade he prefers, because Dan is a US trader, and so his best time period to trade is the US session, and so he likes to take the trade, for example, typically after the London close. And so, and he used the max to handle these London close trades, which worked pretty nice well with the, yeah, that's still 3 hours away. But don't forget, the second half of the US session, usually after a first movement, the market becomes quiet, because we are at the end of the day and most of the liquidities have been handled during the European session. So there is a smaller potential left for the second part of the US session. So, but we can still grab some interesting trades. So in many pairs, so after the London close. So, any questions about what I have shown today? Because I think it's a good time to wrap up this session. So, any questions? Yeah, indeed, Adrian. The best time, there are 2 good time periods to trade. trade in general. The best one, of course, is the European session. But with the European session, we have to pay attention, because your remark at the beginning of this session was an excellent good remark when you have commented on the fact that many pound pairs have made a good movement before the London Open. And indeed, this happens rather frequently during the ASEAN session. The pairs containing one Pacific currency, so the yen, the Aussie, or the Kiwi, can start a good movement in the middle of the ASEAN session for many reasons. Perhaps because there is an important news release during the ASEAN session. Perhaps because there is an event the big boys expect, especially for the moment with the pound and with the Brexit. And so indeed, if we want to catch these movements, which are often nice movements, so we need to trade also during the ASEAN session. But that's true. Some nice movements start during at the middle of the ASEAN session, indeed. So, but globally, the best session is the European session, and there is a reason for that. And the reason is the following. I'm going to explain quickly. Let me take a chart, or let me show something else on Forex Factory. You know that if you go on the home page of Forex Factory, at the bottom of the page here, you have the three main sessions clock. So we have the ASEAN session, the Tokyo session, the London session, and the US session. And you can see that there is an overlap between, so here, the ASEAN session and the European session, and then a large overlap between the European session and the US session. And this is why, in fact, the European session is the most traded session when a majority of the liquidities are handled inside that session. And so few liquidities are left in the second part of the US session, but sometimes, depending on the news we have and some unplanned event we may have for the moment, for example, on the pound, but also on the Pacific currency, we may have some good trends starting around that moment here. And so the pound Kiwi, the pound Aussie, the pound yen are typical such pairs which may start a good trend in the middle of the Tokyo session. And so if you are able to trade the ASEAN session, you can profit from these movements. So, but in terms of liquidity, most of the time, so the best session, and you can understand why, is the London session. So, okay, for most of the pair, with the concept that each pair has one or two natural sessions to trade. If you take the Euro US dollar, the best sessions to trade the Euro US dollar is the European session and the US session. If you take a pair like the Euro yen, the best session to trade the Euro yen is the ASEAN session and the European session. So the session corresponding to each currency in the pairs. Well, and you see what I was explaining, so the area around the home base would have been a critical area, and this is what has happened. In fact, now the price is pulling back. This doesn't mean the trend is reversing, so it means simply we have an important pullback, and that pullback was enough to take the decision to close the trade at this point. And if we have another long setup, so I will continue to take long trade until we are in the time window when most of the movement will exhaust. In the meantime, so I thank you very much for your participation today, your patience, because it has been a long session. So I thank you very much. And so we will have another open house session for the non-farm payroll on the 5th of April. And you will be, of course, all informed of the day and the moment, so in such a way that you may participate if you want. So thank you again for your participation. Have a great weekend, great end of the week, great weekend, rest well, and see you next time. Bye everyone, and in the meantime, take care.